HCL Tech has released its second quarter numbers. Let's cut across to Rima Tendulkar, who joins us with the numbers. Rima.
Thanks so much for that. So it's a bit soft compared to what the street was anticipating. The company has clocked in a constant currency revenue growth of 1%, lower than what we were anticipating. 1.3% was the CNBC TV 18 poll. The company has also lowered its full year guidance. Now, the guidance earlier was 6 to 8%. Now the company is saying the organic revenue growth guidance is going to be 4 to 5%. If you include the SAP acquisition, which was done just in the month of July, then the growth revenue is going to be 5 to 6%. So look at it in whichever way, there is a scale down in the company's guidance. So the revenue guidance has come down from 6 to 8% that it was prior to 4 to 6% on an organic basis, including the SAP acquisition, it will be 5 to 6%. So just like Infosys would scale the upper end of the guidance, you've got one more IT company which is coming out and saying that the outlook is on the muted side. In terms of deal wins is solid for the company. Deal wins, 16 large deals, total size is about $3.69 million. So 3.9 billion is the total contract value of the deal wins, which compares with 1.56 in the prior quarter. So deal wins have more than doubled on a quarter-on-quarter basis. 3.9 compares with 1.56. So a big jump in the deal wins, and the second big positive is the margin. Margins have come in ahead of what the street was anticipating. They've expanded by a good 140 basis points on a sequential basis to come in at 18.4%. So, the picture is pretty similar to what we've seen with the rest of the IT companies, that the outlook still remains very uncertain and murky. No IT company is coming out yet and saying that there is a pickup in demand. HCL Tech doesn't give you a guidance, but nothing in what the management commentary had to tell us gave some comfort about demand reviving. Infosys, in fact, lowered the upper end of the guidance, and they're saying growth this year is going to be just 1 to 2.5%. And now this is the third IT company, HCL Tech, which has also lowered the revenue forecast. 6 to 8% revenue growth has now become 4 to 5%. So this is the common playbook, right? That things have not yet improved. Q2 has been muted, but that was an unexpected line. The positive in the numbers are the company is very aggressively cutting costs, and they're improving their margins. So now TCS, Infosys, and HCL Tech. The third company, which is clocked in a beat on the company's margins. Now for HCL Tech, we were anticipating margin improvement of about 60 basis points. 17.6% was the CNBC TV 18 poll, an expansion of 60 basis points. But the company has gone ahead and improved their margins by 140 basis points. And the second positive is the deal wins. We've got Omkar Tanksale with us on the show now. Omkar, again, the problem is going to be on the guidance, even for HCL Tech. HCL Tech saying the organic revenue growth is seen between 4 to 5% in constant currency, while including the SAP acquisition, it's going to be 5 to 6%. And they're confident about margins being maintained with what they had earlier guided, 18 to 19%. How will you read this guidance that they've given of 4 to 5% in organic terms?
Definitely, I mean, from the guidance from the HCL Tech that they have given, that definitely, I mean, the demand scenario is still being skeptical, and there will be a spend cuts in the discretionary IT spends. So that will be likely to continue. The trend will follow. The recovery will be not as quicker as we were expecting, and it will take some few more quarters to settle down in terms of revenue. Hello?
Recovery, yes. Thank you, Omkar. So according to you, the demand recovery is still some time away, and there is no clarity yet provided by the companies on any immediate pickup and uptick in the demand environment. Thank you very much for joining in. So there you have it. Archana, HCL Tech's Q2 numbers, a mixed bag. Slightly lower on revenues, but a very good performance on margins and solid deal wins doubling to nearly close to $4 billion. But the problem is the cut in the guidance. The company is saying growth for this year is going to be just 5 to 6%. Back to you.
All right. Thank you, Rima, for that update. Important takeaways of That big number coming in. All right, on that note, it's a short break time, but when we return,